What is up, everybody? Welcome to the first episode of Technical Tuesdays, brought to you by Pipit to Profit. We're going to be posting videos every single Tuesday to our YouTube channel that's going to help you guys improve your technical analysis skill, improve your Forex trading skills. This week's video is on 3 basic steps that you guys need to do before you go ahead and take any trade to make sure that you are on the right side of the trade. This is going to help you develop an overall bias in the market and help you execute based on that overall bias. Thank you guys for watching. Hope you guys enjoy. All right, let's get this started. We're going to be going over AUD/USD when we're doing this Technical Tuesday to go over the 3 steps that you guys need to do before you take any trade. All right, so first step number 1 you guys always need to do is start on your higher time frame. Start on your monthly time frame, and it's going to give you an overall big picture of what the market is doing. This is going to help you understand market flow better, help you understand where the market is going long term. Even if you're an intraday trader, even if you're not trading long term, you need to know the overall long term direction, so then you can break it down into smaller time frame moves. All right, so how I do this is I go to my monthly time frame and I identify areas where the market has sensitivity in the market. So looking here, we can see a clear area where the market has reacted and had lows and rejected multiple times. I'm going to go ahead and circle these areas for you as well. All right, you can see right here that we established a nice area of demand, another rejection where price stayed above, and that we're back at this zone again. And back over here, market initially pushed down into this zone, and also here we broke through and rejected before ending up breaking back to the upside. So this is our lower zone. This means that price is most likely not going to break any lower than this. So we should be looking that when price comes to this level, that it should push higher. All right, next thing we're going to do is identify an upper zone, or an area of supply. All right, when I'm looking in the market, I can see clearly right here that we have a lot of sensitivity at this price level. Okay, we can see clearly right here where we had price break above and retest that zone with this candle closing above this box. We see right here 1, 2, 3 bullish candles. Then all of a sudden, right in the middle of this zone, we have 1 bearish candle before continuing to the upside. This shows me that there was hesitation right here before continuing to the upside, breaking back up and then retesting back in this zone. Once again, we broke below, retested this zone here, and then 1, 2 more at here. So these are our monthly zones. All right, the market is always consolidating on one time frame or another. All right, so we can see right here that we do have some sort of potential consolidation happening right here, where we're coming up, coming back down, coming there, and now potentially going back up. All right, so now we can continue breaking it down from our monthly time frame, knowing that these are our major areas on our monthly time frame that we need to look at. And we can go down to our weekly time frame now. Let me just go ahead and fix this up a little bit. And I always like to color code my zone so that I know which time frame I got that zone from. So blue is for my monthly zones. We're going to bring this down to the weekly time frame now. All right. And what we're looking for is, now we don't need to focus on the rest of the chart. We need to really focus on what's in the middle between these 2 zones to see and break down this potential next move. We know that price should not break below the zone, and if it does, we need to reanalyze and look for this to come lower. And we know that price should not break above this zone, and we're nowhere near this zone anyway, so we have a lot of room to go. Now we need to see where in the middle can price potentially have some sort of reactions. So looking at the market right here, we want to identify some sort of mid-range zone where the market is constantly bouncing off of. Oh, and from here, let's go ahead, and sometimes I like to grab a line and kind of look across to see where we have the most area of sensitivity. So I see here and here. We're going to go ahead and draw our zones based off of this. Like I said, I color code where I found these zones based on the time frame. So yellow is for my weekly time frame. And now we're starting to get a better sense of the flow of the market here. We can see clearly where we're having reactions in the market on our weekly and our monthly time frame. See a lot of hesitation in this zone, rejections, rejections, rejection, rejection again, and then once again that break retest here. A lot of consolidation between this monthly and weekly zone. We do get a couple of false breakouts right here. Yes, we get once again rejection here, a break and retest here, a rejection here as well. So there's a lot of points that are touching these two zones, which means that in these zones that there's a lot of buyers and sellers fighting over the market on which direction it's going to go. All right, so now let's go ahead and kind of look at price and where it's at right now and see what's potentially going on. So we see previously that we had not one but two rejections from this monthly zone and just started pushing to the downside in this nice downtrend, right? Now what are we seeing? We're kind of seeing the opposite, right? We see a big push up, a huge rejection. We come back up, and now it looks like another potential rejection. This is the same thing that we see over here, where we had a nice uptrend going on, and we see one rejection, two rejection, and a big push down. Comes back up like here. So let's go ahead and erase this so you can see. Push back down, big rejection back up, just like here. And then another one, two rejections to potentially come higher. So overall, I'm looking at potential bullish price action on AUD/USD just from going on the daily and the weekly time frame. Now, if you guys are intraday traders, this isn't going to really help you because we need to know what's going to happen next. Like if you're only getting in for 50 pips, this isn't going to help you because if we were to enter long right here, well, guess what? We would need to have a 280 pip stop loss, and we're going to be holding this for quite some time. But we need to identify these zones so that we know, all right, as an intraday trader, I see that we have potential bullish big moves in the market. So I should focus on only buys because trading with the trend is going to help me. All right, now we're going to go ahead, bring this to the daily time frame and do this one more time and find these mid-range zones that we could potentially look for trades. I'm going to go ahead and modify this monthly area a little bit just so we can look at things a little bit clearer. All right, coming to the daily time frame, now we see those 1, 2 rejections looking very nice. And we see overall that we've had more opportunities even on the daily to buy recently than to sell, even if you're just doing intraday trading. Now we go ahead and look in this zone one more time, and I can see right here that we have a clear area of sensitivity on our daily time frame. All right, daily. There we go. So now that we've gone and we have our higher time frame perspective, the next thing you need to do is identify the trend based on the time frame that you're trading on. So we know overall that we have a bullish bias in the market, but are we trending? Do we have a bullish trend just yet? Well, let's look at the flow of the market right here on the daily time frame. We see that price, we're going to mark our moves in the market. Push to the downside, and then we have a higher low. So this is a downtrend, downtrending still, and then wait, what happens here? We get still a lower high than our previous high, still a lower low technically, but then what happens right here? We get a higher high, or a higher low. Yes. And then, no, a higher high, and then, sorry, and then a higher low here. Sorry, I'm just all mixed up right now. So a higher high, then a higher low. So this is potential uptrend. Then what happens again? We get another higher high. All right, so now we're looking at, we have an uptrend starting to form. Next step, because remember, we're only on step 1. The next step after this, now we have our trend. So step 1 was use our higher time frames to create a bias. Then identify the trend. So we see that we have an uptrend going on right now. Our last step is to use these structures and ask yourself, when is the best time to get into the market? Where do I want price to be for me to enter into this trade? We know that we're looking for buys, but when do I want to get in? Do I want to get in right now? I don't know. Let's break this down a little bit more, go down to the 4-hour time frame and see what's going on in the market. All right, so we're on the 4-hour time frame, and we can see this nice uptrend going on right now. Now, we see that price just broke to the upside and retested this level right here. But price is trading below that retest, below these previous highs that were made. All right, price is below there right now. So is it a good time to buy? No. We want to wait for a confirmation that this price right here is going to actually break above, retest, respect this level, and then continue to the upside. Now, what are we looking for when we're looking for something like that? Well, what we're looking for is candlestick confirmations. Now, what that is basically looking for strong bullish price action that's going to show us that price wants to continue in that direction. So let's use an example right on this uptrend right here. Okay, so we have a nice clean uptrend, and we're going to go ahead and draw it. Push, retest, push, retest, push, retest, push. Okay, so here's our uptrend. We see a level of support resistance right here. All right, so now when price comes to this level that we're seeing right here, when are we looking to get in? We're looking to get in right at this level, but we don't have any confirmation. And this price could easily respect this longer term downtrend and say, all right, well, this is a push, this is an exhaustion, and price is going to continue down. And then what happens? Well, then we can find reasons to sell, right? We have resistance levels right here and price will go down. So we need a confirmation that price is going to continue upwards. So when we wait for a candlestick confirmation like this bullish candle right here, and what this bullish candle is showing us is that as soon as price came to this level, we had more buyers than sellers. Why? Because let's zoom in and I'll show you the difference between these two candles. And it's a small difference, but it makes all the difference in trading. And a lot of you guys are already going to know this, but a lot of you don't follow this in trading. All right, so we came down to that support level. And we're going to go ahead and mark it right here. And everyone's thinking, all right, buy here, buy here, buy here. Well, this, like I said before, it could have easily broken to the downside. But when we see that we retested this zone, and now we have bullish confirmation, we have a strong bullish candle that's going to lead us to keep pushing this higher. This is going to allow us to have a more confident and accurate entry and say, hey, I know price should continue back to the upside, or at least I'm very confident, and there's a high probability. Now, do we put our stop loss right here? I personally wouldn't. Why? Because price can easily make a double bottom, a double confirmation, and push against you in the opposite direction. So let's give an example right here. If you would have bought right here on this retest of this zone and put your stop loss right below this candle, well, guess what? This candle just wicked just barely to that level, and now you get stopped out. So rule of thumb in trading is to always put your stop loss one structure below where price is trading. So we see right here, we have a nice structure right here, and this is going to protect our trade from going against us. All right, so we can put it right below that structure and then continue all the way to the upside. And on this trade, we just about get 2-to-1 risk reward if you would have held it all the way to the top. We barely get 2-to-1 risk reward ratio. All right, but this is the type of confirmations that we're looking for to enter this trade. So back to where price currently is trading at right now. Well, what are we looking for? We're looking for that same strong bullish confirmation. And we did see that right here, but if we didn't place a trade yet, because we do see the strong bullish candle, if we didn't place the trade yet, well, then we're going to wait again to make sure that price is going to continue to the upside, have our stop loss below this previous structure, this previous swing low. And where are we going to target? Well, we can go back to our daily and weekly charts. And this is what's so important about giving that longer term perspective, because now we have exactly where we're going to bring our targets to. We know that price is pretty clear to come straight up to that weekly level. All right, we do have a level of resistance right here. So we can mark it right there and say, okay, well, we're going to make sure that we take partial profits at this level, or at least move our stop loss to break even at this level, because we could have some sort of reaction at this mid-range zone right here. So we've marked that off on our daily time frame, but we know now from looking at our longer term time frames where to take this trade all the way until. And we see a 4.3 to 1 risk reward ratio. This is how you guys are going to become more confident in your trading strategy and become more accurate in your trading strategy, and not have to worry about sitting in a trade for days before it makes the move. Once again, we did reach this level of resistance right here. But if you just blindly went and said, okay, we're in a downtrend. This is a lower high. This is another lower high. This is another lower high. I'm going to go ahead and sell. And I'm going to sell right here as soon as it touches. All right. Well, problem number one is your stop loss needs to be all the way up here. If you're fine with that, that's great. If you try to put your stop loss just above that structure, well, guess what happens? You're most likely going to get wicked out. What's the next problem on just entering right here? Well, now we have to wait 1, 2, 3, 4, 5, 6 days before we start getting that move to the downside, a whole week before we really start getting any profits on this trade. Well, if instead you don't have to deal with all that 6 days of just holding a trade and being completely nervous and, oh, it's going up, oh, it's going down, oh, it's going up, oh, it's going down, I'm in profit, I'm not in profit. Instead, we can bring this over to our 4-hour time frame, our lower time frames, now that we have a longer term perspective, and wait for that confirmation. All right, so we come to this level, and we always say that we want to wait for that double confirmation. So let's mark out the flow of the market right here. Well, shorter term time frames, we're in an uptrend, still in an uptrend, still in an uptrend. All right, still in an uptrend, correct? So we avoided selling right here. Why? Because we're still in an uptrend and this is still a higher low. Now what do we see? Push to the downside, no longer in an uptrend. Because what happened right here? Price failed to make another higher high. And then we break to the downside. All right, and then we could have entered on any one of these strong bearish candles. Now, instead of waiting those 6 days from here where you entered, we see 5 days and 20 hours before the move even happens, we're getting in right here, which is an overall difference of about 12 pips. I'll sacrifice the 12 pips for 6 days of heartache and 6 days of holding a trade and risking it going against me. And now I'm also more confident. Why? Because we followed that short-term structure and that short-term trend, and then used our long-term analysis to get the big move to the downside. You can see right here that we come all the way down to that support level, 3.4 to 1 risk-reward ratio on this trade, and easy 165 pips. And we didn't have to wait to go into profit. We basically instantly went into profit. These are the differences that make traders more confident and more accurate every single day. I really hope this helped you guys. I really hope this helps you improve your trading strategy. I want you guys to start implementing this every single time you trade. All right, step one, start on your longer term time frames. Identify those major monthly, weekly, and daily structure. All right, after that, you need to mark out the flow on your daily time frame. Mark the flow of your pushes and your exhaustions to see what type of trend you're in. Are you in an uptrend or a downtrend? Then you can go on your lower term time frames and say, step three, when is the best time for me to get into the market? Where should the market be for me to enter into a trade? All right, because right now we're in a pretty good situation where we're right at a level of structure. However, what happens when you're looking at the market We'll go to the daily, and we're right here. We did all this work and we're right here. This is where we're currently at. Is there a potential trade? No. So what are we looking for then if the market is all the way in the middle of a push to the downside? We're not going to sell in the middle of this move because it's not an appropriate risk. Like, you're going to have to risk way too much to enter. So you need to wait for the market to come to you. Well, now you start playing out options. Either the market's going to come down to this daily and then begin to uptrend, and at this point, that's when I'll take buys, or we're going to break to the downside and continue the downtrend. I'm going to wait for a pullback below structure, and that's when I'm going to enter for sells. So even if the market is not currently at one of your structures, well, now you have a plan on what you're going to do, which is, if we were right here looking at the market, we're waiting for either rejection and for the market to start uptrending, which it didn't, or exactly what happened. We'd be patient and we wait for that break to the downside, that retest, and now we go ahead and enter short right here, and the trade plays out. This is what you need to do, those 3 steps. Use your longer term time frames, identify your monthly, weekly, daily areas of structure, identify what type of trend you're in, and then identify when is the next best time to jump into the market, not just haphazardly jumping into the market because now you know that you marked up your charts and we're in a bullish market, so we're just going to buy. No, you need to wait for the market to come to you, to come to that sweet spot price that you're looking for it to come to. And then once it comes to that price, this is the most important part, wait for confirmation that you're right in your analysis, which is a bullish engulfing candle or a bearish engulfing candle if you're looking for sells. Really hope this helps. Comment below if this helped you and what you'd like to see in our next Technical Tuesday video, and we'll make sure to cover that. Also, if you guys ever want us to go over a certain currency pair when we're doing these trainings, drop that in the comment section below. If you guys like this, we also have more free content for you guys to look up on podcasts. All right, you can go to Apple Music, Apple Podcasts, Google Podcasts, look up Pipit to Profit. Go on Instagram, look up Pipit to Profit. We're going to link everything below on this YouTube video so you guys can get all of those resources for you guys for free. Thank you guys so much and have a great day. I'll see you guys next week.